We'll start with Lucia.
Thank you. Boy, that was quite the education, Simon. I appreciate it. I have two questions, one from last week and one from this week. You said that we ought to clean the past this week, and I wondered what you were speaking about.
By clean the past, I mean there's been a lot of uncertainty in the tax treatment of cryptocurrency in our industry. And some people, and I'm not saying this is you or anyone else, might have took the opinion that their crypto exists outside the system. And when they deposited it to Celsius, they may still have that stance. And if they still have that stance, I'm trying to let them know that the tax authorities probably have this data. And if you did anything because of uncertainty in the past and you didn't know how this was treated, now's a good time to clean the past, understand the treatment of the tax implications, and then determine how you're going to move forward from here. That's what I mean by clean the past.
Okay, very good. Thank you. Now, from last week, you mentioned something that which confused me, and maybe I'm just the only one here who's confused by it. But in
I
terms
bet you
of
weren't.
in terms of NUCO and Fahrenheit, my understanding was that Fahrenheit was going to be NUCO, but now I'm thinking, I think I heard you say that they're not. So can you explain NUCO and the relationship with Fahrenheit, please?
Absolutely. Okay. So at the moment you have Celsius, and Celsius has all the assets. It needs to pay some out to custody, but our assets are Celsius's assets based upon the court hearing. So Celsius has a bunch of assets, and it also has a bunch of debt, and it's got way more debt than assets. That's why it's in bankruptcy. That's Celsius. Celsius is also a group that we're trying to subordinate when we vote to this plan, and not subordinate, sorry, consolidate. And so everything gets kind of solved in the confirmation hearing and how we vote on the plan. Then we end up with this essentially Celsius with a commitment to close in about 90 days. So what's Celsius going to do? Well, Celsius is going to firstly appoint a sponsor, and that sponsor is going to be managing various part of our assets. That sponsor is an agreement, a management agreement, with a company called Fahrenheit, and Fahrenheit has shareholders. Fahrenheit is owned by Michael Arrington, Proof Group, a company that's going to be doing staking. One of the proposed CFOs for the board, Ravi, Steve, who's going to be proposed to be the CEO, and it's also owned by who have I missed? US Bitcoin Group, who's going to get a management contract to do our mining. Okay, you're not going to have any equity in that company. That's Fahrenheit. You don't own it. We don't own it. What are they getting? Well, they're agreeing to invest into NUCO. What's NUCO? NUCO is a company where we're going to be approximately, after dilution, 90% shareholders. Fahrenheit is going to be a shareholder, and they're going to have locked-in shares. And in exchange for that, they're actually going to invest 50 million into NUCO, and that 50 million is either going to be, used to purchase shares in the market when NUCO goes live on NASDAQ, or it's just going to be invested into the company and become part of the assets of NUCO. It's also going to receive 450 million from Celsius. So Celsius is going to give a bunch of our Bitcoin and ETH, hand it over to NUCO, and it's going to, in exchange for those assets, it's going to get those shares in NUCO and give them to us in order to settle some of our claim. So you've got Celsius, which is a company to close. You've got NUCO, which is a company to go on NASDAQ and receive a bunch of assets, and we're going to be 90% owners after dilution. And then you've got Fahrenheit, which is the management company. And within Fahrenheit, they're going to be managing the mining, the staking, and they're going to get some shares themselves as well to align our interests. And that management agreement will come out in the plan supplement, which is due to come out today. Does that structure make sense? Oh, as I let you down.
Sorry about that.
No worries.
I just we've got a number
So
of speakers.
that's the structure.
So
okay, no worries.
Lucia wishes to come
three
back.
Different important entities.
Okay.
No worries.
All right, we've got Tony V.
Hey, Tony.
Let's bring up Tony V 1 sec. Just trying to bring Tony up. Hey, Tony, you're up.
Hey, what's up, guys?
Hey, Tony.
All right, so my question is, I missed this video. I was in the middle of something, so you might have answered it in this video, but I don't understand going full ETH. It seems ass backwards. If you want to maximize your recovery and you want to take risk, I don't think ETH is the route to go, right? Because if you toggle full equity, you'll get a 30% premium. So right off the bat, you're ahead 30%. Nuco equity will have a Bitcoin miner, so it'll be correlated to Bitcoin. It's going to have 500 million, 450 million of ETH that will be staked, so it'll be correlated to ETH. Whereas ETH and Bitcoin aren't, I mean, I guess ETH is correlated to Bitcoin, right? But if there was ever a year or a cycle where Bitcoin vastly outperforms ETH, this is that cycle. You know, the demand for this Bitcoin ETF is through the roof. I'm not sensing the same demand for an ETH ETF.
Yeah, cool. So that's Tony's perspective, and let me share my perspective. I want an income and a growth play. So ETH staking gives me income that allows me to convert my ETH stake into Bitcoin and potentially, at a higher risk, underperform or overperform Bitcoin to try and fill some of the Bitcoin hole, not the dollar hole. So that's my income play. And then my growth play is that a bunch of that is just going to be done within an equity structure. It may or may not trade at a multiple. And there's a growth play there. And I'm trying to hedge so that, because they essentially, the company will be receiving all the income, but they'll be reinvesting it into mining and growth. And so I just want one income play and one growth play. But I understand if everyone wants to go all in on one strategy, then you might just pick what you think is the most likely strategy to perform. And obviously all the loans people want all of earn people to go full equity so that we can get the tax strategy right for them so that they can go full crypto and get a more favorable tax treatment. So that's kind of where I'm thinking. And then I think you just gave a completely different approach. And if you're thinking in dollars and stables, then your approach might be a better approach to fill the dollar hole. But if you're filling a Bitcoin hole, I think you've got to do something different.
Well, I'm looking at a Bitcoin hole. I don't really care about the dollars. I don't need them now. ETH staking, everyone says it's, risk-free or whatever. It's not. Vitalik doesn't stake his own ETH. The CEO of Ethereum doesn't stake his Ethereum. I forget what it's called. I'm not up to date with all the ETH stuff, but there's a lot of risks there.
Yeah, 100%. And that's why it was built into the system. Because I said in the original video that this is my risk capital Bitcoin. It's not my Bitcoin stack. And so if this is your Bitcoin stack, you just want to preserve your Bitcoin. If this is your risk capital Bitcoin, then I have to outperform Bitcoin. And the only way to outperform Bitcoin is to take additional risk. And Ethereum, by definition, as you said, is additional risk. So that's the additional risk I'm taking on to try and fill the Bitcoin hole, which may or may not work and may end up with less Bitcoin.
But if you take your distribution in Bitcoin, right, it's going to be like 30, whatever, 34, 35, 36%. Whatever it comes out to, the rest in the equity, which you plan to take anyway, the equity will most likely outperform Bitcoin, right? Just from a percentage, you know. Um, what is this? Sorry, I'm driving. This guy's a maniac in front of me. But the equity is most likely going to outperform Bitcoin. You're going to cap your bottom on your Bitcoin play, right? Because you're going to get it in Bitcoin. And then it's just a matter of timing. You're going to try to maximize the top of the market. You're going to wait like 4 months, 5 months, whatever it is. Bitcoin always has a reversal. And you can maximize the number of Bitcoin you recover. And you could literally do this 3-4 times per cycle. It just happens every single cycle. If there was a safer, quote unquote, safer way to take the maximum amount of risk, I feel like that would be the best way to do it. But maybe that's just me.
Yeah, so you may want to go 100% on that. I always prefer to go 50% on one strategy, 50% on the other, because that company could just get wiped out with NASDAQ. We don't know.
Well, no,
You know,
I'm not saying to go 100% equity. I'm talking about your crypto distribution remaining in Bitcoin, so at least you have that, and then you're taking the risk on the balance with the equity.
yeah, so, I'm not saying my strategy is wrong and your strategy is right. I'm saying they're different strategies. Okay, should we move to the next question? Azad?
Okay, let's bring up Thomas.
Simon, man, this has been a heck of a ride, no doubt.
Hell
Hear me
yeah.
okay? I as an aside, I just got an email a couple of maybe 2 hours ago from Stretto that just said disclosure statement. I don't know if that's the document that we might be looking for on this, but just
No.
FYI, it just came through not
Yeah,
long
disclosure
ago.
statement. Have you only just received it? You should have got it a while back.
No, I've had the disclosure statement for quite some time. I got another email today, and it just said it was from Stretto. It just said
Okay.
disclosure statement on it, and I thought maybe that was some sort of supplement, or might have been something that that you were talking about looking for.
I'll check it out after
My
this call. Yeah.
my questions though are I think you answered the first part of it, and I'll give you the second part as well. But the 90% equity that we'll have in Nuco will Fahrenheit have the entire other 10%? And you mentioned something just a moment ago, said that it was locked equity. So that was my question: is there something in place to prevent them or principals from just dumping it the moment it hits the market and causing it to lose value? The other question that I had is
Yeah.
will
Let me
we
take that.
have
Let me
the
take that
ability?
question.
Okay.
Yeah. So basically, Fahrenheit are getting 5%, and I think another 5% based upon performance. There is lock-ins, and I believe that. God, I've read the whole disclosure statement, but there's certain bits I forget. I think that may be an additional detail that would come out in the plan supplement in terms of the actual agreement between the two.
Yeah, I'm about 300 pages into that document, and it's brain crushing, but good. I mean, obviously very thorough. But so there may be some stuff that's in there that I just haven't gotten to yet.
Yeah. So during the auction, like K&E were and the UCC were very focused on making sure there's alignment of interest, because if you think about it, in the original agreement, we were going to give like $1 billion of crypto. And then we were going to pay these extortionate fees, and then we were going to pay a percentage of the assets under administration based upon a benchmark, and then that all changed to them having some equity skin in the game and us aligning our interests that way.
Yeah. The other part of my question, and you may not know this, and I think you've addressed it partially, is are we going to be able to direct where Nuco stock goes? Meaning, can I tell them to put it into this brokerage account or that brokerage account, or I mean, preferably into my Roth account so that I don't have any future taxes from gains on that. But are we going to be able to direct where that goes?
So, as per anti-money laundering requirements, you can only withdraw from the same account, the same name you had set up, to the same name with another account. So if you have an individual
Okay.
account, you'll only be able to withdraw it to an individual, a crypto exchange or a hardware wallet that you say is yours. And with the shares, you'll only be able to receive them in a brokerage account that's set up in your name. If you have a Roth IRA account on Celsius, then you'll only be able to withdraw it to a broker that will service your Roth IRA. I don't think you're going to be able to. If you want to transfer them in between, then you have to incur a taxable event in order to do that, and find a provider that will do that for you. But any regulated broker that is able to offer this service for you, you'll just have to get an agreement with that broker, and then the transfer agent, which is the one that's going to be holding all the shares and delivering them to your broker, is going to be they're going to have their requirements as well, most likely. Well, they'll rely upon the broker meeting their requirements. So you just got to pick who your
Yeah, because
suppliers are.
my Celsius account was in my name, and my Roth IRA account is in my name, but they weren't mingled. I mean, it wasn't a
Yeah, so you're
Celsius
going to
Roth
need two
IRA. It was like
distributions. You're going to need two crypto distributions, two accounts, two legal entities, and you're going to have to
okay.
get the shares into an account that's set up in the name of your Roth IRA and an account that's set up for you.
Lovely, lovely. Well, thank you again for all your hard work and everything. And I can't. It's hard to believe that we can actually see the light at the end of the tunnel here.
Hell yeah. Thank you.
Thank you, Thomas. Okay, next speaker is Michael.
Hello, can you hear me?
Hey, Michael.
Hey, I have two questions slash ideas for the community. So the first one is, would it be possible to, if you have, or you can set up a self-directed IRA, to then purchase my own bankruptcy claim and then move those funds to the Roth IRA via like the bankruptcy claim?
Yeah, the answer to that is you need a Roth IRA provider that would be willing to do that for you. And if they believe it's compliant and they're willing to take the risk, then that's what you need. So yeah, it's 100% on finding a Roth IRA provider that would allow you to transfer your claim to that Roth IRA. That's going to be a hard find, a really hard find.
Okay, because if you set up a self-directed IRA, you can invest in whatever you want. Like you are the decision maker.
Okay.
Okay.
Yeah, but you need the IRA provider, right? They will just
Okay.
do whatever you do. They'll still need to legally prove that you transferred your individual ownership, and then it would need to comply with the brackets of what you can invest in the IRA, right?
Sure, but I could purchase
Even if
the bankruptcy
self-directed.
claim. I could purchase the bankruptcy claim at a severe discount, just like other people are purchasing bankruptcy claims for pennies on the dollar.
Yes, so you should certainly consider that.
Okay.
I think that's a very valid thing to consider if you can pull that together.
Okay.
That would be very useful.
Okay, that was question one / suggestion one for the community, and then question two / suggestion two is it possible that I or someone could set up a company to purchase bankruptcy claims from other creditors, and they wouldn't be purchased at a discount? They'd be whatever, if they're going to get $100,000 back, they'd be purchased for that price, but then distribute to the creditors in the equal proportion to the amount of crypto they have on Celsius. So they had like 70% ETH, 20% Bitcoin, and 10% Cardano or whatever. It would give them back in that manner rather than the 50-50 split.
Yeah, I think that's above my thinking. I'd need to see that mapped out, but think about it. And then I'm trying to think, if you wanted to purchase claims, you're going to have to meet all the deadlines, and the deadlines are fast approaching. So I think in the disclosure statement, it says 21 days prior to plan effective date, and plan effective date could be the 26th of October, depending on what Majinski and Nuke do. And then so you may be in early October. So any transfer of claims, and then I would not advise, but I think you've got to consider fair market value, and yeah, and then you've got a securities transaction most likely. There's a myriad of things
Okay.
in that consideration. I couldn't
Okay.
just answer that. You'd need a lawyer to definitely give you.
Yeah.
There's
That was more
regulatory,
of an
there's
idea.
compliance, there's valuation, there's tax.
Okay. That'd be
There's
more
all
an
sorts of
idea
stuff.
to, help out other creditors, to keep them from, if they had like all ETH and they get half Bitcoin back, to keep them from that implication. So, okay.
Cheers.
Thank you. I appreciate it.
Thank you, Michael. All right, next speaker is Brett.
Oh, hey, Simon, how are you?
Hey, Brett.
Hey, Simon, quick question. On that box where you select the get more equity than crypto, is that considered a higher recovery for you, percentage-wise?
Yes, it does. So you get, if you end up with more crypto, then it goes to a 70%. If you want more equity, then you can get 130%. So basically, those that want more crypto are forgoing some of their recovery in crypto and giving some of that recovery to you in equity. And so the equity is just matching up those that want more equity with those that want more crypto. And then if you've got a loan, you'll get priority over that crypto. And if you've got an earn account and you want more equity, you're highly likely to have that demand filled, because somebody may want the tax treatment in the loan side of getting a discount, but it's more favorable for them from a tax side.
So the more equity, when you're getting the more equity, will you get some crypto at all, or just be all equity?
No, it will be based upon demand. So they'll do the weighted average, and then that will be fulfilled. They'll do the maths, and then I think all the demand from those that want more equity will be filled, but there'll be excess demand for those that want more crypto. And then they'll just match the two together, and then you'll end up with a weighted average at the end, and you'll know where your position is.
But you're saying still 130% would be, you probably get,
Yes.
we'll definitely get more back on your recovery.
You'll definitely get more equity value back, 130% on the equity portion.
Gotcha. Great.
Yeah, sorry if I'm not saying it right, but because you've got to get all the legalese language, but you understand what I'm trying to say. Right?
Yeah, I get you. I just remember you saying something about your 105% claim. What do you mean?
Oh, right. Now the 105%. Sorry about confusion. I'm really glad you asked these questions, because there's so much in this plan. So the 130% relates to the toggle, whether you go for equity or crypto. The 105% relates to whether you're going to opt in to the class claim or opt out of the class claim. And I'll go through this in a lot more detail next week.
Gotcha.
But the class claim, they just increase your percentage, and you may receive more from those that opt out. So like if someone's got a sell token claim and they want to litigate it and they want to try and get 81 cents, then they could opt out, and then they wouldn't get 105%. And depending on the outcome of that, everyone could end up with slightly more crypto from those that opted out of the plan. So it's a bribe to make you opt into the class claim, because you get a higher recovery potentially from those that opt out and want to pursue litigation on their own.
Yeah, because you pursue it on your own, then you're just taking the chance of you losing or winning. But
Yeah,
you're
I'm not
guaranteed
touching
100.
it personally.
Great.
Yeah.
Got you. Thank you. Great. Thank you, Simon, so much. I appreciate it.
Thanks.
Okay, next speaker is John.
Good afternoon. Thank you so much, Simon.
Pleasure, John.
Yeah, am I live?
Yeah, we got you.
Again, Simon, thank you so much for your tireless work. I've relied on you from the very beginning for sound advice and clarity from this shit sandwich. Thank you so much. The question I have is, am I correct in assuming that the class action claim proceeds are completely separate from Fahrenheit and stock ownership? And if so, what expectation do we have on timeline for those proceeds?
Yeah. So completely separate. Your crypto distribution is recovery strategy 1. Your equity is recovery strategy 2. And your litigation proceeds is recovery strategy 3. And the good thing is that they value the litigation as 0 in the plan. But we're going to have to invest 50 million. And in the supplemental document, it will say who's going to be the litigation administrator. And then there's going to be 7 litigation oversight committee. 1 selected from the loans ad hoc, 1 selected from the earn ad hoc, and the rest selected by the UCC. If you look at the different claims we got there, I think there's 140 different line items. Now, I don't want to talk about it because it's a horrible subject to talk about. But there may be clawbacks, and part of that is people may settle in the voting process, or they may want to see that through because they think they've got a very valid defense, which will come out in the confirmation hearing or later. The downside of that is people are going to have to delay their payment, which may be fine for some people, and others will want to settle to get a sooner payment. I'll go through more of that next week. But the litigation, of the 140 people, for example, there's about, let's just use some basic maths. There's a $2 billion claim against FTX, which is highly speculative. But, for example, Genesis, Gemini, Digital Currency Group, and FTX had a $4 billion claim that settled in the end at about 125 million. We've also got Daniel's loans. He did a sell back loan to try and extract USDC stable coins. Nuke did the same. They used their free sell token that they received and will be pursuing those back. We got Majinsky's wealth. And then there's all the insiders, influencers, things like when we Tether issued a loan and then they had a settlement, which led to a $97 million loss for the estate. That was in, the clawback period. So there's all the institutional. It's things like Equities First, where that just hit the docket, where they owe approximately $500 million, $500 million, almost $500 million of collateral that they lost. There's stake count. All in all, there's all these different litigations, and hopefully the litigation administrator and the litigation oversight committee can turn that into a nice little income generator for us. We'll see.
Sounds fantastic. Do we expect that proceeds might come in pieces or at the very end?
I think it will come in pieces. So I think, immediately, litigation's long. It could go on for years, but it will be like a nice little Christmas present that will come every now and then. And it's got to be shared amongst everybody. So it may be small, it may be large, we don't know. But hopefully they can turn that into a little profitable business, or it could just be like the Series B settlement where they get 25 million and then the lawyers get 24 million and you end up with 1 million at the end that goes to administrators and fee examiners, and it could be a shit show like a continuation of Chapter 11. We'll see.
Understood, Simon. Thank you for the clarity.
Cheers.
Thank you, John. Okay, next speaker is Prashad Prab. Sorry.
Hi, can you hear me?
Yeah, we can hear you.
Hey, Simon, can you hear me? Yep.
Yeah, got you.
Okay. Hey, thanks for taking the questions, and definitely, good to go through what you have been, definitely, teaching us in this space. Definitely, a lot of things to learn. So thanks for all the help there. Couple of things that I have in my mind was, just to be sure, I think I heard the question, but just to be sure, I know there is two toggle options, like toggle options, one for higher weighted average stock option, one for higher weighted average liquid crypto option. I understand, in either cases, I understand that you will get the stock option. You will get the new company's stock, new company common stock in either cases, right? I mean, doesn't matter if you're choosing higher crypto in return or higher stock in return. In either cases, you will get the new company stock.
Yeah, unless you got a loan, you may end up getting all of your, you may get all of it fulfilled. You don't know,
Okay.
But we don't know. It's market driven.
Okay.
I expect that everyone will end up with some equity and some crypto as a result. I don't think. Yeah,
Okay.
we'll see.
Okay, no, it makes sense. There is another thing I'm seeing right now. It's called as no election. No election would give you a higher percentage of crypto return than what you get if you choose the new company stock option. Where is that option to choose from? I understand it's like an in between option, the higher higher crypto option versus the higher company stock option.
I'm not sure I understand that bit.
So
I think can I defer that question to next week when I do the actual form?
okay, sounds good. Yeah,
Yeah.
I see the ballot form. There are, I mean, I see only two options, but there is an election default option. I don't know where to.
Yeah,
what...
so I've been through the ballot. I've watched some of the UCC videos, but next week I'm actually going to read everything and vote. So I'll hopefully understand the question better next week.
Okay, no, that's fine. That's fine. No problem. My second question is probably straightforward. If you have USDC in your account, Celsius account right now, I mean, you won't get that also. I mean, it's either BTC and you would get that like in terms of BTC or ETH, correct? ETH, right? Depends upon.
Yeah, as heartbreaking as it is, Celsius spent all of our USDC. So if you look at the line items of revenue over the last year, a bunch of them is money that they withdrew from exchanges, stable coins that they sold, altcoins that they sold. Yeah, you know, they've been they've been surviving, and the 350 million cleanup ended up with all our stable coins gone. So you're going to end up with just a Bitcoin and an ETH distribution and equity, no stables.
Okay.
Thank you for your question, Prashant.
Yep.
Okay, next speaker is Steve Slade.
Hi, Simon. Thanks for all your work in this. I wish if there was a way to add one more wrinkle from the UCC, and that is a option to take fiat, take the default, but get paid instead of in crypto, get paid in fiat. The reason why I don't want to toggle towards the NewCo is that it's unclear as to the timing when you would receive the NewCo shares, and it's unclear is its performance when it becomes public. So I'm going to do the default option, but I'm kind of wasting my, I'm in a somewhat unique tax situation that I'm indifferent to whether or not I get the crypto value as crypto or as fiat. So I would love to be able to toggle up to where they would give me kind of like in the NewCo shares, they give them a 30% bump. I would take my default side of the crypto side as fiat if they could give me a bump up. That would be a great incentive to not take crypto out of the estate.
Interesting. So I think if you wanted to lobby for something like that, then you'd have to. I think your best bet to get change is to be a part of the ad hocs, the relevant ad hoc, and then they can try and put something like that forward. They've got the consultation agreements at the moment. It's the only way to get shit done at the moment.
Yeah.
In terms of, I don't think it's likely that the estate would see it as a benefit, giving you a bump, which would dilute their claim just to pay you in fiat, because I don't think anyone would want that or care. But lobbying to, without a bump, be able to select the fiat option, depending on the size of your claim, it may be something you could arrange with Celsius directly if it's a larger claim. If it's a smaller claim, it's probably the only way to get something like that implemented would be to lobby within one of the ad hocs that's relevant to you.
I'm a corporate account, and so I'm right at the cutoff between getting it in fiat or getting it in crypto. So I probably could get it in fiat anyway. But I was just hoping that maybe if I was on the one of the top 100 corporate accounts that they would give me a bump if I could take it in fiat versus crypto. That's
Yeah, so
but they've
theoretically, if
obviously all the
you
guys in the earn ad hoc are in loan ad hoc are hearing all this. So if they want to try to get more keep more crypto in the estate, they can then maybe lobby that.
yeah, it doesn't actually make a difference. It would just dilute the recovery everyone would get, because converting from Bitcoin to fiat to ETH
Okay.
doesn't change the pie. So giving someone a bump would be something. I mean, personally, I'd lobby against it. Just being
Yeah.
the truth, because that would
My
just dilute
ultimate
everybody
goal,
for
my
no
ultimate
gain.
goal is, Simon, is to split my bets. So I've got enough Nuco shares, and I'm satisfied with that. And then the rest of it, though, by getting it in fiat or getting it in crypto and immediately selling the crypto fiat, I can then toggle that to a risk strategy where I would then buy on the largest Bitcoin miners as well as Microsoft and Coinbase. By the time I get to Bitcoin whole from both sides of the ledger, I'll still have the Nuco shares, and then I'll have these other Bitcoin proxies to try to get to Bitcoin whole.
Cool. Okay.
Thanks.
I think luckily as well, because you're within a corporation, depending on your accounting rules, it would be fairly easy to just execute that within the corporation.
It is.
Yeah, so you could just do the trade yourself, probably.
Well, the biggest thing, it was a Roth IRA, and I had paid $500,000 in federal taxes to put this money into this shitstorm, and now I'm glad I don't have any tax liability with getting out of the shitstorm.
Okay, thank you.
Thank you, Steve. Let's go with Waffle. Waffle, if you can hear us, you're up. Okay, we'll try with Hilux level.
Hi, Simon and Azad. Similar to Trong's question in the comments, let's say I deposited 1 BTC into Celsius. I assume my average cost base now becomes the price of BTC on that date. Then when distribution happens, I can work out the price of BTC on that date. And with this info, I can hopefully give it to my tax advisor and they do the magic. Now, just wondering, what do you think, just hypothetical, what could we tell our tax advisors about any crypto we deposited into Celsius that's not BTC and ETH? Because we're only getting back BTC and ETH, right?
Sorry, could you say that last bit again? I just
Sure.
got someone.
So let's say I deposit something other than BTC and ETH into Celsius.
Yep.
What is it that we would do from a tax point of view, you think, in most countries? Because we're not getting back, like, let's say I deposited, Solana.
Okay,
right?
Yeah. So what the way that I've thought about this in the past, and a lot of people think about it, is when you go from crypto to crypto, you have fictitious dollars in the middle that you never actually receive. So if you went from Bitcoin to ETH, in most interpretations of their tax codes, and it also depends, because some countries, they have like 1 year rules where it's tax free. In El Salvador, it's legal tender, so Sharon will have a different treatment. But in general, when you go from Bitcoin to ETH, you have fictitious dollars in the middle. So you take the Bitcoin to dollar price at the time of the trade, and then you take the ETH to dollar price at the time of the trade, and then you use that in order to set your in order to base your tax price, as it were.
Okay, so I get that for Bitcoin and ETH. So is it I sort of would have to convert all my cryptos to a price on the day I deposited them into Celsius? Is that the better way to go with my advisor?
Well, so you've got your initial cost base, and you end up with different cryptocurrency. and the price you're going to use would be whether your advisor interprets that if it's the price at deposit, the price at petition, where it went into fictitious dollars, or it's the price when you receive the distribution. They're going to have to make that determination.
Okay. We'll see.
Yeah.
Thank you.
Thank you.
Thank you. Okay, next speaker is Kurosh.
I just want to put another, that may have all been completely wrong. I'm not a tax advisor. Don't rely upon that. This is just ideas that I'm sharing based upon certain experiences.
Yep, no problem.
Okay, thanks for that question. Next speaker is Kurosh. Can you hear us? You're up. Okay, let's bring up Naginator.
Hey,
Hello.
hey, Simon.
Oh,
Hello.
sorry, Naginator. If you just hold, let's bring up Kurosh.
Oh, thank you. I didn't know what I was doing with the buttons. Thank you, Simon, for everything you've done so far. I have two questions for you, sir. Number one question is, you may have answered it in the past, but please educate me here. After all the settlement, you understand that there's a haircut. We are short. What's going to happen to that money? Are we going to go after Mr. Mashinsky and his gang? How is that going to be dealt with? Number two,
Let's do one at a time.
Yeah.
You're involved in a bankruptcy, which means you've made a loss. So you made, by depositing with Celsius and Celsius going into Chapter 11, depending on the price at which you bought that crypto, you may realize a capital loss and you've made a bad investment. So that money is gone, never to return. In order to try and make it back, you've got three different ways, which is the cryptocurrency you receive back may outperform the original crypto you had. And so therefore you might, if that cryptocurrency outperforms it, you might be able to trade it back, and that's your own efforts. Or the equity that you receive performs incredibly well, and it outperforms the original cryptocurrency that you had, and therefore you're able to sell the shares and buy back the original crypto that you had. Or we go after Mashinsky and everybody, and we're pulling together a budget of $50 million, and there's a litigation administrator that will pursue a potential 140 different claims. And if they make a profit, they will periodically pay out a distribution, and then you can use that distribution in order to buy back the original crypto you had and chip away at the whole. But, it's everything needs to work. If, like the Bitfinex situation that we did before, we ended up with like a 16x on the equity. We ended up with a bunch of dividends that, because of the Bitfinex returning and doing really well. And then we ended up with the money that was originally hacked returning more recently. So think of it like that, and that started in 2016 and it's now 2023. So some things take ages, other things were really quick. And so, you may never receive the money back, but you're just developing a strategy for how you think about it.
Right, I get it. Okay, so it is in hand. So he is being pursued. It's just a matter of time whether we get it or not. That's another question. Number two.
Yeah, I believe that if we succeed, it may take 2 years, but I think any ill-gotten gains as a result of Mashinsky's crimes, if he's made guilty, I believe the recourse will come back to the litigation trust, and they'll be used to make a distribution to us, I believe. That will help me, I don't know, figure out whether the US legal system works or not, but who knows?
Okay. The second question is that I'm hoping you're familiar with a company called eToro. And on eToro, basically what happens is that you can do your own trade, or you can follow someone, okay? And your trade will be exactly matching theirs. Is there any chance that you could think about setting up something similar to that on part of your company, Bank to the Future or whatever it is? And for people like someone like me, I'm just making an example of myself, someone who is not quite sure what he could do to recoup that money and follow suit. So if I wanted to put, let's say, only one ETH in there, I'll just put one ETH and I'll follow that, okay, and I'll make money or not, or whatever it is. Or I could actually withdraw it at any time that I wish. Just something within similar kind of setup. I think that might be very beneficial for someone like me, because all of it is confusing. I'm going to get part of what I had, and I'm really kind of don't know where I'm going to go with it. Whereas if someone was doing something and we could follow that, and it's actually happening automatically, so you just put the money into an account and you'd say,
Yeah,
this
got
is
it.
what I want. Yeah.
So yeah, I'm very familiar with eToro. I actually went to their original seed round to invest in the company and didn't invest. That's one of the deals I missed because it was a European company and they moved over to the fintech accelerator. But yeah, the quick answer is that's my idea of hell. I don't want to run a fund, and I don't want people copying my trades. So like at Bank to the Future, we're execution only, and we have no intention of setting up a managed fund or anything like that. Or I'm not a trader. I'm a shit trader. I used to work as a market maker. No one should follow any of my short-term trades. I'm just a long-term investor, and I share with people what I do so they can decide if they want to do it. And at Bank to the Future, we just provide the tools to go between private equity, public equity, retirement funds, self-invested accounts, crypto staking, and just focus on Bitcoin, stablecoins, fiat, and ETH. So yeah, that's what we provide. But yeah, we've got no intention of doing something where you might be able to copy us or we make the decisions. You make your own decisions. We provide the tools.
Okay, thanks for that question, Korosh. Next speaker is Najanator.
Hey, Simon. Two quick questions, and this is just more about helping people I may know that have not been paying attention at all still and may not even vote. So just wanted to know what happens to people that don't vote. Let me answer. That's the first question. So if you have any information on that.
Yeah, I want to make. I just put the disclaimer out there that I'm not a lawyer, so I may be wrong, but I believe you're just going to be dragged along with the actual vote, and you'll receive all of your distributions. It won't infringe you in any way. I believe that you'll still get the 105% claim. I believe that you'll be opted into the class claim. I believe it won't be considered a yes vote for the plan. The only people that will be considered are the ones that vote. So it just means you don't get a say, and you just be dragged along with what everyone else does.
Okay. And last question is people that have voted or even not voted, I guess, what are some of the things you think they need to have established and in place to receive their funds? Like one of them obviously is having a wallet. Maybe that could be an exchange wallet and a hardware wallet address. Or I guess I guess on the security side, those people would have to establish some kind of brokerage account, right?
Yeah, so I'm trying to build up to that. So in video 1, I said define your strategy, and then you know what you need. In video 2, I said figure out the key dates on the timing tax and litigation, and then that will determine at what point you need what you need. In video 3, I said here's how I'm going to be voting in order to achieve the strategy that you set for yourself. And in video 4, we'll be sharing the solution that I'll be using and all the different tools that you might need if you're going to be doing it. So one of those will be a place to receive your cryptocurrency and a brokerage account to receive your shares. And then if you're going for something more exotic, understanding the different types of consequences of setting up an individual structure, a corporate structure, a trust structure, or a retirement structure, which would be obviously a more encompassing process. And then the software that can pull through all your different tax situations and present it in a way that makes it easier to file your tax consequence. and then a tax advisor that's willing to take on the assumption that you need in order to pay your tax if you're going down that route. All of that's going to be needed. So we're building, I'm hopefully building up to that without overwhelming everyone by saying everything in one go.
Thank you.
Thank you. Okay, we got one more speaker up. MIG Liberté. Can you hear us? You're up. Okay, we'll bring back up Lucia, who I accidentally cut off earlier. Sorry about that. Lucia, you're up.
Said last week that when we get our distribution of Bitcoin and Ethereum, it'll go to a PayPal account. Did I get it right?
If you're in the US,
In the
yes.
US. Okay. All right. Good.
If you're an individual account in the US.
Okay.
Also remember to go to my on Twitter. I got a Celsius community there, and every time a court doc comes out, I just give a little interpretation of what it means. One of the slides there was a complete breakdown of each different type of account and where you're likely to receive your distribution based upon the current information.
Okay, excellent. I'll go look at that. All right. Thanks again. Bye.
Thank you. Okay, Zara, do we come in to an end? What's the time?
Yeah, I'm trying to bring up Dan from Recap, one of Bank of the Future's portfolio company, but having a hard time bringing him up. So let's bring up Two Eyes.
Okay, we'll wrap up after this one.
Yeah, go ahead.
How you doing, Simon? Appreciate all the work you've assisted with. So I have a question. So when we get our distributions via PayPal in the U.S., if I just decide to take it as is, my distributions, I believe it was at 36.5% in both Ethereum and Bitcoin, and then take my equity. If I just take it as is, wouldn't there be no tax implications because I'm getting less than what I initially put in to Celsius in the first place?
Well, again, can't give you tax advice, and I don't know your cost base, but likely by a taxable event, it doesn't necessarily mean you owe tax. It could mean that the tax authority owes you money. But a taxable event just means that you've created a price at which to report whether you think the IRS owes you money or you owe the IRS money. So you may, if you entered a higher cost basis, then you may have a capital loss, but you create a taxable event when you receive your distribution.
Okay, yeah, that makes sense. And when is this expected or you believe, I know there's no definitive timeline, that we would be able to get paid out from PayPal, at least our first distribution?
Yeah, I'm guessing November.
Oh, wow. Okay, so that's way sooner than I expected.
Yeah.
Oh.
Maybe December. I'm hoping it's going to be this year. I know that's the target, and that's the way the deadlines have been set up. Something would have to go wrong for that not to happen.
Okay. Is there any reason?
Okay, I think we've lost the speaker. Sorry about that. Okay, Simon, I think that's a wrap. Your final comments.
Okay, awesome. I know it's a lot of information, but I just wanted to give you everything. I appreciate Tony coming up and pulling question to the strategy I'd like to follow and giving an approach that he would follow. And that's exactly why I did these things, so that everyone can develop their own strategy and think what makes most sense to them. Next week, so if you go to simondixon.com/recovery, next week we will be distributing login details to the membership portal. And in the membership portal, we'll put video 1 and video 2. We'll put the transcribes and slides. And under each video, you'll be able to ask other community members questions, and everyone can chime in if they want to answer something in a more structured way around that particular topic. Next week, I'll be going through voting, having had this week to analyze the first draft of the planned supplement. And then the final one, I'll be sharing the tools that we'll be offering for any international customer that wants to use our services, as well as the tools that you can use if you're just going to be using someone else's services. For example, if you're from the US or you don't want to use us. So that's where we're heading at the moment. But do go back. If you didn't watch the video, please put the time in now. Things are happening, and you receiving your money will have consequences, and you're better off planning those consequences rather than leaving them to chance, because there are a lot of regulators and there are a lot of tax authorities and there are a lot of people all over this one. So make sure you make your decisions, and there is a bunch of uncertainty. So if you are confused, if you don't know what's coming next, that's a perfectly natural thing, because actually in some countries, I know for a fact there's going to have to be legislative changes in order to actually know how to handle this. So I'm hoping that tax authorities will just accept that this is a unique precedent. I'm not aware, maybe I'm completely wrong, but I'm not aware of a bankruptcy that had 650,000 creditors that was involved in a massive fraud that ended up with a public company that's going to distribute shares to 100,000 different shareholders. So anyone that says there's a norm here, anyone that understands that, this is actually history in the making. And if it wasn't such a painful experience, if it wasn't leading to so much loss to so many people, this would actually be just a very, very interesting, case. And you are involved in history. I know that that's no consolation, because it's been an awful experience. But that's the reality of the cards that we were dealt. So head back to video 1, determine your strategy, understand the tax consequences, watch video 2. Next week, understand how you're going to vote. I'll share how I'm voting. And then finally, understand the different types of accounts and things that you're going to have to set up in order to take back what is rightly for yours as a result of your claim and being involved in this shit show. As always, I'll see you on the other side. So I'll see you this time next week. Thank you.